Hello everyone, welcome to another online session of class 12 accountancy unit partnership account chapter admission of a partner. Today we are going to solve a numerical question related to the topic. Here question. Rose and Daisy carried on a business in a partnership sharing profits and losses in the ratio of 3:1. Their balance sheet as at 31st March 2014 was as under. Liabilities side. Creditors rupees 93,750. General reserve 10,000. Capital accounts Rose amount inner column 75,000. Daisy amount inner column 40,000. Total capital 1,15,000 in the amount column. Asset side. Land and building 62,500 rupees. Furniture rupees 2,500. Debtors inner column amount 41,250 less provision for doubtful debts 1,250 amount column 40,000 rupees. Bills receivables 7,500 stock rupees 50,000 cash at bank rupees 56,250 balance sheet total 2,18,750. Lily was admitted as a partner on 1st April 2014 on the following terms. Number 1. She was to bring in rupees 35,000 as her capital for 1/5 share in the profits. So, new partner's share of profit is 1/5 and she has to bring rupees 35,000 as her capital. This amount will be credited on the credit side of partner's capital account. Second, goodwill of the firm was valued at rupees 1 lakh. Lily was to bring half of her share of goodwill in cash. So Lily's share is 1/5. So Lily's share of goodwill is equal to 1 lakh multiplied by 1/5 is equal to 20,000. Half of 20,000 is equal to 10,000. 10,000 rupees bringing in cash and 10,000 rupees adjusted towards capital account, otherwise current account. Next, stock and furniture were to be reduced in value by 10%. So assets reduced, revaluation account debit side, and the provisions for doubtful debts was to brought up to 10% of the debtors. So increase in the value of provision for doubtful debts is also a loss. So it also will be shown on the debit side of revaluation account. The value of land and building was appreciated by 25%. Assets increase, value increases. So it will be shown on the credit side of revaluation account. And at the end, creditors include an amount of rupees 5,000 received as commission from Pinky. The necessary adjustment is required to be made. It is a commission, it is not a creditors. So the value of creditors reduced. Creditors is a liability. Whenever the value of creditors reduced, the amount will be shown on the credit side of revaluation account because it is a profit. Now you are required to prepare necessary accounts and balance sheet of the newly constituted firm. Answer: revaluation account. We are starting with the adjustment number 3. Stock and furniture were reduced by 10%. 10% of stock and 10% of furniture will be shown on the debit side of revaluation account. To stock 50,000 times 10 by 100, 5,000. To furniture 2,500 times 10 by 100, it is 250. Next, provision for doubtful debts was to be brought up to 10%. So debtors amount is given there in the question. It is 41,250. 10% of this amount will be 4,125. Take the difference between the new amount of provision for doubtful debts and the old amount of provision for doubtful debts. Here 4,125 minus 1,250 amount is 2,875. It is the increase in the value of provision for doubtful debts. So to provision for doubtful debts 2,875. Next, the value of land and building appreciated 25%. So Old value it is 62,500. Credit side by land and building, 62,500 multiplied by 25 by 100 is equal to 15,625. Next, creditors. Credit side by creditors amount 5,000. Now, three amounts are there on the debit side and two amounts are there on the credit side of revaluation account. So, total of credit side exceeds the total of debit side. So, take the total of credit side first and transfer this to the debit side also. 15,625 plus 5,000 is equal to 20,625. So, take the amount to the debit side and subtract 5,250 and 2,875 from 20,625. Now you are getting 12,500. In the particulars column, to profit on revaluation, ROS 3 by 4 multiplied by 12,500 and DAC 1 by 4 multiplied by 12,500 amounts 9,375 and 3,125. Next, you have to prepare partners capital account. Opening balance is given there in the old balance sheet. By balance brought down, ROS column 75,000 and DAC column 40,000. Next, check any accumulated profit is given there in the old balance sheet. Yes, it is given general reserve amount 10,000. Divide among the old partners in their old profit sharing ratio 3:1. So, by general reserve, ROS column 10,000 times 3 by 4, 7,500 and AC column 10,000 multiplied by 1 by 4, 2,500. No other accumulated profits or loss is given there in the question. Now you have to check revaluation profit or loss. Revaluation is profit. ROS is getting 9,375 and AC getting 3,125. The capital account credit side by revaluation account in bracket profit. ROS column 9375. DC column 3125. Next, goodwill adjustments. What is the amount brought by Lily? 10,000 rupees brought by Lily and 10,000 rupees we are adjusting towards her current account. So, by premium for goodwill 10,000 multiplied by 3 by 4. ROS column 7,500. 10,000 multiplied by 1 by 4. Daisy column 2,500. Next, by Lily's current account, same amount 10,000. 20,000 minus 10,000 is equal to 10,000. We are dividing this amount also among the old partners in their sacrificing ratio. 10,000 multiplied by 3 by 4. 7,500 in ROS column and 10,000 multiplied by 1 by 4. 2,500 in Daisy column. Now, we have 5 amounts in ROS column and Daisy column. One more item is there by bank. What is the amount brought by the new partner? 35,000 rupees. Write that amount in Lily column. No item is given there on the debit side. To take the total of credit side, ROS column 75,000 plus 7,500 plus 7,500 plus 7,500 plus 9,375 is equal to 1,06,875. ROS column total 1,06,875. Daisy column total 40,000 plus 2,500 plus 2,500 plus 2,500 plus 3,125 is equal to 50,625. Last column Lily only one amount 35,000. Transfer the amount to the debit side and to balance carry down. ROS 1,06,875. Daisy 50,625 and Lily 35,000. So this amount will be shown in the new balance sheet as capital of the partners. So new balance sheet as at 1st April 2014. Liability side, capital account ROS 1,06,875. Daisy 50,625. Lily 35,000. Total 1,92,500. Creditors. Old amount given there in the question, it is 93,750 minus 5,000. amount 88,750. Asset side, land and building. Old amount it is 62,500 plus appreciation 15,625. Now 78,125. Furniture. Old amount 2,500. Depreciation 250. 2,500 minus 250 is equal to 2,250. Debtors 41,250 inner column less provision. New provision it is 4,125. Difference 37,125 in the amount column. Stock old amount 50,000 less depreciation. Now we have taken on the debit side of revaluation account 5,000. 50,000 minus 5,000 is equal to 45,000. Bills receivable. Bills receivable old amount is 7,500. No adjustment related to this. So same amount you have to take here 7,500. Cash at bank. Old amount which is given there in the question 56,250 plus 35,000 capital plus premium for goodwill 10,000. Total amount 1,01,250. Lily's current account. That is the amount which she did not bring us premium for goodwill. That is adjusted towards her current account. Lily's current account 10,000. Now the balance sheet total it is 2,81,250 on both the sides. Thank you.